All right, let's talk about Charter Communications. Now, this is one of the biggest names in American cable, but right now this industry giant is at a serious crossroads. It's facing a storm of competition that's really shaking the foundation of its business. So let's break down what's happening.
And this gets right to the heart of the problem. For the first time, well, ever in its modern history, Charter is actually losing broadband customers, the very core of its entire operation. We're talking over 200,000 net losses in just 9 months. Now, this isn't some small dip. It's a huge warning sign that the ground is shifting right under their feet.
And you know what happens when customers start leaving, right? Investors get spooked. The market has reacted swiftly, wiping out a third of the company's stock value just this year. That's a clear crisis of confidence. So what is really going on here?
Let's be clear about who we're talking about. This is the heavyweight champion of cable, the second largest operator in the entire country. But it is now locked in a brutal fight against some really aggressive new challengers. I'm talking about super fast fiber optic networks and that surprisingly effective fixed wireless internet from mobile carriers. This isn't just another business cycle, this is a battle for survival.
So to really get what's going on in this fight, we first have to understand the king and why his castle is suddenly under attack.
Okay, so most of us probably know Charter by its brand name, Spectrum. And they are massive. Their network can reach nearly 60 million American homes. For years, their business model was simple and it was incredibly effective. Dominate the high-speed internet market. This made them an industry leader, a Wall Street favorite. But that was then.
Now look, Charter isn't just sitting back and watching its kingdom crumble, not at all. They've launched a pretty aggressive counteroffensive, and it's built on a clear 3-part strategy.
So here it is, their playbook. First, they're locking in customers with a really aggressive bundle. Second, they're future-proofing their network. And third, they're expanding into new, uncontested territory. Let's dig into each of these moves.
That Spectrum One bundle, the one that combines internet with a mobile line, is actually proving to be a big success. You can see here, Charter has managed to attach a mobile plan to 21% of its internet customers. That's significantly outperforming its main rival, Comcast. And this isn't just about selling more phone plans, you know. It's a powerful strategy to make customers stickier and way less likely to leave.
But Charter also has this kind of hidden weapon, a massive cost advantage. While fiber competitors are spending up to $1,000 per home to build brand new networks, Charter can upgrade its existing cable lines to deliver gigabit speeds for about $9 per home. This lets them stay competitive on speed without completely breaking the bank.
But Charter's strategy isn't just about operations. It's also about a very, very aggressive financial model. And this thing has been a powerful engine for growth, but it also carries some significant risk. It's a classic double-edged sword.
For years, Charter has used its cash and a whole lot of borrowed money to buy back its own stock on an incredible scale. I mean, just look at this chart. They've reduced the number of available shares by more than half. This move was like a rocket booster for investor returns, making each remaining share more valuable, as long as the business was growing, of course.
Right, but here's the other edge of that sword. To fund all those buybacks, they've taken on a huge amount of debt. We're talking a ratio of 4.5 times their annual earnings. Now, when profits are growing, that's manageable. But if profits start to fall, that debt load suddenly becomes a very, very heavy anchor.
So, facing all these challenges, Charter is making its biggest and boldest move yet, a mega merger with another cable giant, Cox Communications, in a bid to completely reshape the industry.
This is a massive deal, but the logic behind it is pretty simple. Get bigger. By combining with Cox, Charter would become the undisputed #1 broadband provider in the U.S. Period. This would give them more scale, allow them to cut $500 million in costs, and let them roll out their successful mobile bundling strategy to millions of new customers. It's a bet that in this war, size matters most.
Okay, we've seen the siege, we've seen the counteroffensive, and we've seen the big bet. Now let's bring it all together for the final verdict from an investor's perspective.
This really brings us to the two sides of the investment coin. The bulls see a world-class company on sale at a huge discount. They believe the bundling strategy is working and that the Cox merger will create a ton of new value. The bears, however, they see a company under relentless attack, with way too much debt, significant execution risks, and the real possibility that these customer losses aren't just a temporary blip, but a permanent decline.
Charter is definitely not standing still. It's fighting back with a clear strategy and a game-changing merger. So the ultimate question for investors is this:
Is this a brilliant turnaround in the making, a classic value opportunity, or is it just an attempt to catch a falling knife? The next few years are going to tell the tale.